Today's topic, as you can tell from the opening slide, is identifying directional bias. Identifying directional bias. And I'm stoked to talk about this topic because it's a huge part of what I do on a regular basis. I mean, it's a very key part of my daily analysis. It is not terribly difficult. It's one of those things that traders will want to make difficult. I mean, we all try to overcomplicate things, but we definitely want to avoid that unless for whatever reason, by using a more complicated method, it's going to give us better insight into the market. But the markets are complex enough as it is. We don't need more complexity, right? So I'm always looking for that straight line from point A to point B. So I definitely want to talk about this. It's a term that I basically coined. I make up little phrases here and there, and directional bias just seemed to be one of those things that made a lot of sense, because if I were to use the word trend, I think a lot of traders would be using their own subjectivity, their own opinion, their own view of what exactly a trend is. So rather than using trend, where we already have such a fixed opinion of what that means, my idea then was to say, you know what, I don't want to use that word trend. There's already so much that's factored into that word. There's already so much opinion attached to that word that I'm better off using something completely different. And that was the idea behind this concept of using the word directional bias. Okay, just so you know, it wasn't me trying to be cute. It was really my trying to avoid all the baggage that comes with telling somebody that a market's in a trend or it's not in a trend. This way, if I use directional bias, I have my own tools and I have my own way of describing it. So I feel it's something that traders will have an easier time understanding. That's the bottom line there. Okay, so you're looking at the IBFX platform right now, and there's a few tools that you'll need in order to identify what the directional bias is. I'm going to explain the tools to you, so we'll talk about that first, and what tools I use to understand directional bias. We're pretty much going to be talking primarily about the daily time frame, because directional bias is all about the daily time frame, the time frame that I feel is most psychologically significant. Hear me out. That doesn't mean it's the time frame that necessarily is going to have the most trades, not even the one that we may consider trading. Okay, but it's about psychological significance. Okay, so we'll be talking primarily about the daily today. As far as directional bias goes, then I'll talk to you about this idea of counter trend versus trend trading, and how directional bias plays a huge role in counter trend versus basically trend following. And ultimately, how directional bias helps you choose which time frames to consider. We're going to be able to do this all from the daily. In fact, another aspect of directional bias is acting as a filter. So we're going to go through those points. Again, it's not terribly difficult. I implore you all not to complicate this, but follow the guidelines. I hate saying rules, but follow the guidelines, and I think what you'll find is, this is what I think you're going to find after you do this consistently. You're going to find that you are not fighting the dominant flow. You're not swimming upstream. None of us in this room are salmon. Okay? And what happened to salmon after they swim upstream? If you fight the trend, what happens to them? They spawn and they die. Okay? There's the lesson from nature for you. Swim upstream if you must, but there's a huge price to be paid if you don't get eaten by the bears in the meanwhile. Okay? Tell me nature doesn't understand the markets. Okay? So you're going to understand how to go with the flow, how to recognize the trend, trade with the trend, and more importantly, understand when there are opportunities to trade counter trend, which there absolutely are. I'm not saying you can't trade counter trend, but I think there are ways to manage a position like that smarter. When you are going to trade counter trend, kind of how to do that and how to do it safely. I think you're going to find that your filter, your pair selection, the list of pairs you'll consider for trading, you'll have one. You know, it's amazing to me how many traders don't have a list of pairs. They just kind of meander through this list of their all the pairs out there, and they just kind of wander around through them, or they fixate, even worse, they fixate on just a handful. You know, they fixate on one or two. It absolutely blows my mind how many traders are still just, absolutely slogging away at the euro-US dollar. Okay, I'll talk to you about how I come up with my list of pairs. So you'll have a way to approach each day with essentially a list of pairs that you will consider are better candidates for follow-through. Realize that follow-through, which is what we are all looking for, and I don't mean follow-through just to our profit targets. I mean follow-through ultimately to potentially our stop losses. Just get me in, or keep me in the trade because it's working for me, or get me out because I'm wrong, but I don't like to just leave my capital locked up. Okay, so follow-through is what it's all about. And you'll find those pairs that are more likely to have follow-through. All right, so I'm going to grab my water here for today. In fact, I think I'm rocking a little San Pellegrino today is what I'm going to go for here. If it doesn't bubble and overflow all over my desk. Ooh, all right. Excellent. Although carbonated beverages are probably not the best to drink when you're speaking to a group of people. Carbonation doing what it can do. All right. So, got my water here today. Got you all here today. We got our topic. So, let's dive on into it. Okay, you got an idea of what we're going to talk about, how we're going to get through the topic, and ultimately the kind of benefits you'll, I think, see if you use directional bias. And by the way, directional bias is not an entry strategy. Okay, I want to mention that. It's not an entry strategy. What it will do for you is take whatever entry strategies you do have, and I think ultimately allow you to use them more effectively. That's what the 34 EMA wave does. I think that's what grab candles do. They aren't necessarily a strategy unto themselves, although they can be. I think what they can do for you, regardless of your trading strategy, is allow you to find out what the underlying market psychology is, in other words, what's the trend, and then allow you to choose from all the strategies that you have and determine if you should be using a trend following, trend reversal, a non-trending strategy where you're waiting for momentum to reveal itself, or a non-trending strategy where you're going to be playing the inside of the range. I mean, that's all the market can do. It can go up, down, it can reverse a trend, or it can chop around sideways, or it can bust out of a narrow consolidation. I mean, that's really all the market can do. So you need a strategy for each. That's something I mention quite frequently in these talks. Okay. All right. So I mentioned we were going to start with the tools. So let's start there. So you'll notice that I am looking at the pound Aussie, but it doesn't matter what chart we're looking at. We can look at Euro Yen. Okay. So again, our conversation is primarily going to be about the daily. The tools on this chart, all the tools that you want to use for directional bias are available through the IBFX platform. So what's really easy is if you go over to the navigator, okay, and you drop down your list here. Notice we have this custom indicators list. and there are a number of indicators that are called the IBFX grab. One's called the B for blue, G for green, R for red. You are going to activate all three of these on your chart. Just drag and drop. Okay? The B, the G, and the R. All three of them, because each one of them will carry over not only the coordinating moving average, but also the color shading. Okay? So these three will create, ultimately, the moving averages as well as the color coding. So super easy. That's the first step. In fact, let me just create a new chart just for example here. Let's go to that Euro US, or Euro Yen, I mean. Okay, Euro Yen, daily time frame. I'm going to go ahead and delete all the indicators. We'll just basically have a plain chart, plain candlestick chart. For those of you that are curious about my chart settings, I like a white background. That's just me. These are the colors that I'm using because ultimately my grab is going to color, it's going to shade my candles. Okay. One thing I do want to mention, and this is really important, is for grab to work, chart on foreground must be unchecked. Must be unchecked. Okay. So I'm just going to carry these over one by one. So there's the green, there's the blue, and there's the red. Now if you want to make adjustments to these, you can. You know, there's things, if you want to adjust the thickness, you can do that. I like to adjust the thickness. I like a little thinner, like a 3. If you don't like these shades of green, choose other shades of green. Okay? So there are ways you can go ahead and make some modifications. One thing I want you to remember is the lighter color of each, the green, the blue, and the red, is essentially a candle with an up close. So think of that as a hollowed or a green candle from a traditional Japanese candlestick standpoint. Okay? So the lighter color of each one of these, the green, the blue, and the red, is an up close. The darker shade is the down close. So consider it a shaded candle or a red candle in a more traditional Japanese candlestick type view. So once you've done that, notice we've got the moving averages here and the color coding. Alright, so I'm going to go back to my chart here. Now you'll notice my chart is shaded in a light blue, and I've done that manually by going into the properties and choosing the, I believe it's Alice Blue. Yep, Alice Blue background. The reason I've done that is because most recently my 34 EMA wave has flattened out to more of a sideways, what I would call a 3 o'clock angle. I can see more blue grab candles in the mix here. So rather than the dominant red that I had back in here, right? Now I'm dealing with some more blue grab candles, indicating more of a neutral, non-trending market. And then accompanying that, I also see the flattening 34 EMA wave. Okay? So when you are looking at the 34 EMA wave, and you see that you're getting more blue grab candles, immediately you should think to yourself, okay, here's more neutral market sentiment coming into this pair, and I could be losing whatever trend or momentum I was carrying. In this case, we were carrying a bearish trend and momentum, and it eventually it transitioned and turned more sideways. Okay? Now that's just from the grab candles and the 34 EMA wave. Those are the first two things. Now, you might have other tools that you use, but Here, what I'm able to do with two very simple tools that are very visual is I can look at the chart and make some quick opinions about the current momentum, the current trend. Like, for example, right now we're getting a little bit of bearishness coming into the market. Notice we have a few red grab candles coming in. Okay, so a little bit of bearishness coming into the market, but ultimately I do have more of a sideways market trend. Again, we were moving down at 4 to 6, and then we flattened out. Follow that middle line of the wave if it's easier. And we flattened out to more of a sideways 3 o'clock or 2 to 4 o'clock angle. Now, for those of you that may not be familiar with the wave or grab candles, we have a ton of video back at the YouTube channel, youtube.com/interbankfx videos. You can check that out. A number of archived talks that discuss these tools and how I use them and what they are. Okay? Here we're talking specifically about the directional bias and how we determine that. Right? Another part of understanding directional bias is making sure you've got the chart in the right, or what I consider the correct viewpoint. I call that market memory or look back. And that means for a daily time frame, at some point I want to have a 1 year on my chart. That allows me to see the 52-week highs and lows. That allows me to see the dominant trends over the course of the last year. It allows me also to keep the perspective of the wave very consistent. I don't want to look at one daily chart with, just a few months, and another daily chart with a couple of years, and another daily chart with, just 1 year. You want a steady look back that allows you to make some decisions about the angle, because one of the things that I talk about here is this clock angle concept. Well, there is a certain amount of subjectivity in that, isn't there? The grab candles are a little less subjective. They plot what they plot. But the angle of the wave can be subjective, especially if you don't use the look back, which here is, again, you want about a 1 year look back. Okay? When I have that 1 year look back, if you were to look at the middle line of the wave and tell me what time is it pointing at? Back here, I would probably guess that most of you would agree with me if I said that back here it was pointing down at 5, and it shallowed out a little bit, sort of pointing at 4, maybe 4:30, right? But most recently, if I follow the middle line of the wave and just extend it out, it's much flatter. That's what I'm talking about when I talk about clock angles. So, with the combination of the wave and the grab candles, both of which you can activate using those 3 indicators in the IBFX platform, you can get this grab candle plus 34 EMA wave layout. Okay. Once you've got that, you want to push that daily chart into a 1 year look back to get a correct reading of the wave angle. All right. If any of you are having any kind of problems getting the candles to plot properly in terms of the colors, my advice is this. I mean, I'm definitely not a tech support kind of gal. I really don't know that we can get into it here in this environment. The best way to take care of it is we have customer service staff who are trained to help you fix these problems one-on-one, which is the best way to do it. Go ahead and give them a buzz, and they'll walk you through the setup and make sure that they're working properly for you. But again, if you drug all 3 of those indicators onto your chart, all 3 of the grabs, and if you make sure that under properties you do not have chart on foreground checked. Like I said, I changed my bar up and down to white. You can use the same color scheme. Okay? It should work for you. And if it doesn't, please call our support and they'll get you straightened up. Okay? Alright, so in terms of the blue, okay, the blue candles, those are range candles, neutral candles. Red obviously is bearish, and green is bullish. I mean, this visually it tells a story, a similar story to the Japanese candlesticks, but not. I think the grab candles tell a better story. I don't think Japanese candlesticks tell as effective a story. Okay, because what I'm getting from the Japanese candlesticks is certainly the red and green of a up and down close, but you can have many up closes in a downtrending market. What I want to have is really the continuity of seeing the red as we're trading lower and lower. When we start to see more neutral, I want to see the blue. When we start to get a little bullish, I want to be aware of the green. It's kind of like candlesticks plus. I think it tells just a better story. All right. Okay, so those are the tools. We mentioned that the idea is to focus on the daily time frame. That's the most psychologically significant, psychologically relevant time frame. So then I mentioned we could also then determine what is counter trend versus trend following. Now the reason I use the euro yen here as our first chart is this is not a chart that has a trend. Okay? This is not a chart that has a trend. With a 3 o'clock angle, it's a non-trending daily chart. And for that reason, I go into properties, and just to remind myself visually, I'll go ahead and change the background to that light blue, that Alice blue. So that when I'm looking at this chart, when I'm looking at this pair, and I realize that the daily chart is moving sideways, I am not interested. I'm not interested in trading longer term time frames. So that's going to rule out the 4 hour. That will typically also rule out the 1 hour. I'll make exceptions for the 1 hour if there is a setup with exceptional clarity, but it's typically going to rule out the 1 hour as well. I will then focus on the 30, the 15, and the 5 because it allows me to stay nimble. It allows me to stay short term. We don't have a dominant psychology in a sideways market. That means neither the bulls nor the bears really have complete control. One session one might have control, another session the other might have control. But consistent follow through, consistent control, not so much. Because of that, I want to stay nimble because I might have a bullish day one day, I might have a bearish day the next as we chop around in this non-trending sideways, and I'd say this is consolidating as it's basically chop around in this sideways mess. The 5, 15, and 30 allow me to stay nimble and take advantage of those changes in direction. And that is if I even want to trade a chart or a pair that has a non-trending directional bias. Because one option, and I mentioned one of the things that this talk will give you, this directional bias talk, is it'll offer you a filter. One of the things you could consider is on the list of pairs for consideration each day, I mean, for the most part, you might want to leave the euro yen off it unless you're going to focus on a short-term intraday time frame. But for the most part, you might say to yourself, I don't want to trade the euro yen at all. I mentioned how funny it is to me that people are really still actively trading euro US. Now, I like the euro US dollar because one of the things that it gives me insight into is the risk environment. I mean, a lot of the risk environment is dictated by whether or not there are positive, optimistic headlines about the euro and ECB action, or whether there are negative and pessimistic headlines about the euro and ECB action. You know, we have been absolutely under an extreme amount of headline risk because that's what's been dictating. I know the other day, when the euro was acting so resiliently, that was on the back of negative, really weak German data, yet the headlines were what were dictating the optimism in the euro, and it gained against a number of other currencies. Not on the data, but rather on expectation that the ECB might have some sort of trick up its sleeve, some sort of solution. Draghi really basically came out and said in a roundabout way, if you were to distill what he said to its essence, was don't short the euro. Well, I don't know, maybe he's been playing from the Bank of Japan playbook, but that doesn't work. It doesn't work for much more than a session or two. Unless there's some action or some reason for traders, especially short sellers, to be afraid of shorting at some point. If the trend is down or the opinion is weak, they're going to get right back in and do what they do. You can't scare traders for more than a session or two. Eventually they'll find the trend. Eventually they'll find a ceiling. Eventually order flow will just start moving the way order flow does. So when I look at this Euro-US dollar, what do I see? I see a market that's transitioned out of what was a downtrend with red grab candles and a 4 to 6 o'clock angle. Here's another Alice Blue background chart that tells me, no, we don't have a dominant psychology. Okay? Now, I've told you which charts, two of the charts that don't have dominant psychologies, and I haven't been trading the Euro-US dollar. I've been doing some trading in the Euro-Yen, but I personally just got out of the Euro-Yen as of today. Had enough of the chop, had enough of the lack of directional bias, and it really was a distraction. So at some point I just asked myself, I'm tying up buying power by holding a position in it. Not a tremendous amount, but I am. And I'm tying up some of my attention. And I don't want to have to deal with a daily chart that doesn't have a directional bias. I don't know who's driving psychology, and it takes away part of the edge that I think I do have when there is a dominant psychology ruling the market. So let's go ahead and talk about when you do have a trend. Okay? Because by the way, when you have non-trending markets such as the Euro-Yen and the Euro-US dollar, again, my focus is, one, maybe I don't want to trade it at all, but if I am, stay nimble. 5, 15, 30-minute time frames. They allow you to stay nimble. So non-trending chart, short-term time frames. Trending charts, that's where we want to be. Okay? We want to be looking at a market that has some sort of overall bias, some sort of opinion where we can step back and say, yep, the bulls are in control, or nope, the bears are in control. When I look at the Aussie Loonie, I'm taking a look at a pair where the Aussie, probably one of the strongest currencies out there right now, the Aussie's been gaining on darn near everything. It's been a very, very strong currency. And as you can tell, I've got some buy orders in this market. I've actually got one buy that's already been triggered. That's my aggressive entry, what I call my aggro buy, and then I'm actually just tickling right now my conservative buy. 2 more ticks and I should be executed at a 1.0480 conservative swing buy. Now, why am I looking to buy? I mean, some of you might say, Rangi, there's an awful lot of red on these intraday charts. Yeah? But I want you to notice, what color is dominating the daily time frame? Not the background. I've gone ahead and made that a honeydew background. But why did I? What are the color of the green? What are the color of the grab candles? Kind of answered my own question there, didn't I? What are the color of the grab candles? Green. What's the angle of the 34 EMA wave? Up, 12 to 2. When we've pulled back, have we found support in the dynamic area between the 20-period simple and the 34 EMA high? Have we found consistent support in this area? Yes. So it is indeed acting as a safety net on pullbacks. So these corrections, these corrections lower are finding support in the wave. Terrific. So my daily time frame tells me that I have a bullish directional bias. Period. It's just that simple. Bullish directional bias. And then I'll color the background in that honeydew, because when I go to this chart, and I like color-coded I mean, if you haven't noticed already, when you're glancing across multiple charts and you're doing this all day long, the more that you can glean at a glance, really, the more quickly you can get through your analysis and the less time you'll waste on pairs that don't have clear dominant psychologies. I like this Aussie loonie for a number of reasons. The Aussie's been very strong. It's been outpacing the loonie despite the strength in crude oil. Okay, it is two calm dolls that are battling it out, but for the most part, the Aussie's been winning that battle. I am also respectful of the fact that we're nearing that September 7 date for the Bank of Canada, where there is still a pretty widespread expectation of a rate hike. So some of that hawkishness has already been baked into the loonie. Okay, but there might be a new round of that expectation being baked into the loonie, which will allow for these corrections. But these are corrections. These aren't reversals. In fact, I won't even talk about this market having reversed until it's likely below the 1.0400 level. And in fact, even once we break 1.0400, we end up with a 200 period simple moving average sitting just below the major psychological level at 394. So there are a number of very significant hurdles for bears if they do want to drive prices to a low in which I feel that the uptrend is broken and a trend reversal takes place. And I don't think we're going to have a trend reversal until we get momentum basically below 1.0380. Now, the way I'm positioning myself is with the 20 period simple as an aggressive buy and the 34 EMA as a conservative buy. This is trend following. I'm following the directional bias of this chart. Now, on the way down, we've had we've had basically about 4 or 5 days pushing lower on the daily. So some of you might say, well, Raghi, what about all this weakness? Couldn't I have taken advantage of it? Absolutely. But since I have a bullish directional bias on the daily, if I am going to take advantage of it, a short would be what? If I know that the daily time frame is an overall bullish market, a short would be what? Counter that trend, right? It'd be counter the dominant psychology, counter the daily trend. So, because of that, if I do want to trade counter trend, which is fine, I want to make sure that, like the salmon that swims upstream, exhausts and spawns, exhausts and dies. I don't want that to be my fate. Okay? If I'm going to swim upstream, it's going to be on very short-term time frames. I'm not going to commit. I'm not going to commit to longer-term time frames like the 240, and I'm going to make very rare exceptions for the 1 hour, but typically not. So I'm going to focus in on, for counter trend, if I want to trade counter trend, these 3 time frames. I'd rather be trend following. I'd rather follow the trend on the daily, whether that be looking for buys intraday or end of day. We just happen to be reaching an end of day buy trigger right now. So I am positioning myself, and actually I just got that buy at my conservative level on the Aussie loonie. So I'm positioned in this market now long, and what I want to see is that price action is able to find some momentum back above 480, challenge 500, challenge 520, and start to climb those major and minor psychological levels and give me the follow-through that we've seen so far in this market. Okay? I know that if the loonie gains from here, the follow-through may be hard to come by, so I'm going to be keeping a very close eye on the data coming out of Canada, as well as anything that Governor Carney and the BOC have to say about what's happening in Canada. Because that could have a huge impact on, obviously, whether or not the Aussie is going to continue to be able to gain on the Canada, on the loonie, the way it has been. Okay? So, again, the directional bias, again, the topic of our conversation here is directional bias. The directional bias in this market is up. So if I did want to play shorts, I'd be doing so on 5, 15, 30-minute time frames. And if I wanted to get long, which I do, I would focus on any of the time frames that are triggering a buy. It just happens to be the daily is the one doing it. Okay, let's take a look at another chart that's trending. And that is the, take a peek here. Here's a Euro Aussie. The Aussie's been having a heyday against the Euro. Basically, we're juxtaposing the strongest currency out there right now, one of, in the Aussie, and one of the weakest in the Euro. So it's no surprise we have a nice established bearish directional bias on the Euro Aussie. So we're moving from an uptrend now to a downtrend. And I don't care what the trend is, as long as there is a trend, as long as I can see that either the bulls or the bears are behind the wheel, that there is a dominant psychology. So in this situation, you can see I'm also short this market. In this situation, I'm capitalizing on the strengthening Aussie, on the weaker Euro, and on the downtrend, which means a buy on this pair would be counter trend. I'm not saying that we can't get long the Euro Aussie, but if you do, you want to limit it to the 5, 15, 30 because it is then counter trend. You can follow the trend on any time frame. Okay, in other words, you can look for shorting opportunities on any time frame. You could look for a shorting opportunity potentially here in the 1 hour. Okay, you then look for potential shorting opportunities up against 1639, and then potentially again up against, this is what, about 1650? Yeah, 1650. You'd short into that and then look for prices to basically test some near-term lows. Okay, so maybe we find ourselves down near 1610. Okay, that would be an intraday trend follow, to swing short on the 1 hour. Okay, I'm already positioned on the daily, and I'm just looking for follow-through. In fact, a big part of my follow-through here, with the remaining part of my position, I don't have much of my position left, but with what little I do have left, I'm really, for more follow-through, I really need that 600 level to break. Not 600. If you notice here, we bounced a number of times on 1600. Sorry, 1600, not 600. 1.1600. 1.1600. I need that major psychological level to break for more follow-through. I've already realized, I believe, profit on half of my position here. So I've just got either half or a third lingering in this market, and its job then is to try to allow me to, with less exposure to the market, try to capitalize on the follow-through to the downside. And really, it's really the only reason I've got any position open in the Euro Aussie is to try to take advantage of what could be a new low. I wouldn't do that with my full position. That's why I've already taken off a good deal of my position based upon the prior support we've seen. But again, with that smaller position, less risk, if we are going to break 1600, I can do so. I won't have my full complement of lots, but I can still benefit and profit from a breakdown if we do. What if we bounce, by the way? What if we bounce and make a more another test of the 20-period simple in the daily? Or what if we bounce and just find ourselves with a much more resilient Euro or weaker Aussie? Fine. I've got a smaller position. Again, I've minimized my risk. I've controlled my risk. In fact, if anything, I'm not giving back my capital. I'm giving back the house's money. I'm giving back profit, right? So again, I can trend follow across any time frame if the setup does emerge. But if I'm going to trade long to the long side, I want to keep that limited to, again, it's swimming upstream, right? I really want to keep that salmon idea in your mind. If the bears don't eat you, you're going to spawn and die. Okay? It is difficult to swim upstream. It is difficult to fight the trend. The trend gives us our edge. The trend helps us choose our time frames. Here I'm talking about how the trend helps us choose time frames. You really want to trade with the trend when at all possible. But there are times when the trend corrects, you might have on the short-term nimble time frames terrific opportunities to get in positions that are counter-trend. But you don't want to do those on longer-term time frames. You want to do those knowing that at some point it's more likely that the short-term intraday counter trends are going to exhaust, and then the dominant greater trend will resume. Okay? So again, we've talked about the tools you use. We talked about the daily time frame is the one that we use for directional bias exclusively. We talked about counter trend versus trend following and choosing time frames. And we've kind of got into this idea that if a market is not trending, you really don't have an edge. And you can use that as a filter. So what I want to do now here is go through a number of pairs right now and talk about that list of pairs that you can consider starting tonight. Okay? So we have a trending directional bias on the Aussie loonie, hence the honeydew, the green background. Okay? That means that it is a pair that would make it to your list of pairs for consideration. Again, up or down doesn't matter to me. I want a dominant psychology. Aussie yen. Is there a trend in the Aussie yen? Well, I do have some consistency in the green grab candle. So there is an argument that we do have bullish sentiment and bullish momentum. But would anybody here say that the angle of the wave is strongly 12 to 2? And if it is it smooth? Are these moving averages smooth? Are they established? Are they respected? That's where the clarity fails. That's where the green grab candles still have some more work to do to get this wave to a 12 to 2 o'clock angle. So this is a transitional market, hence the blue background. And it won't make my list. Doesn't mean I won't look at it. Just means I won't likely consider it for trades. Aussie US. Aussie US. Interesting that with as strong a day as the US dollar had, the Aussie still pretty much held its own. 12 to 2 o'clock angle? Yes. In fact, I have a limit order parked down here. 12 to 2 o'clock angle? Yes. Smooth? Well, it's not the smoothest I've ever seen, but of the three criteria, it's marking well on established, it's marking well on respected, it just is marking so-so on smooth. So three criteria, 2 are very good, 1 is medium. That is an uptrend, and therefore we have that honeydew color background. And furthermore, it will make it to our list of pairs for consideration. Okay? Let's keep going down the list here. I'm just going down my list alphabetically here. Loonie yen, chop all the way. Yes, we're green. Okay, there's no question that we're going green here, but has that sentiment and momentum built into a trend? So if we use our trend calculation, it's pretty simple. Sentiment plus momentum equals trend. And what that means is, if you have organized sentiment, people are thinking a certain way, at some point, they'll act. The action is the momentum. If we have enough momentum in the market, at some point, if it continues, we're likely to have a trend. And how come I can't get that Let's try this. There we go. So at some point, if we can continue on with that momentum, it'll transition the market to higher highs and higher lows for an uptrend, or lower lows and lower highs for a downtrend. So sentiment plus momentum equals trend. And I gauge sentiment and momentum with the grab candles. I gauge trend with the 34 EMA wave. All right. Do I have a trend here? No. So moving on. Blue background, and it won't make our list. Swissy yen. Swissy yen. And some of these pairs I quite frankly don't trade that often. Okay. We did have a slight trend here, but most recently we have the blue grab candles and a flatter wave. I'll go into properties, and I will Alice blue. That's what I call this when I go in and change the color. I'll Alice blue it. All right, let's try that again. There we go. Okay. Alice blue. Non-trending. Doesn't make the list. Euro Aussie. We took a quick look at already. So Euro Aussie is on the list. Euro loonie. Not bad. Not bad. In fact, we actually triggered about 1, 2, 3, 4, 5, 6 sessions ago, not only conservative, but an aggro swing short, and pushed down to a new low as we are now breaking 2200. Let's see if we can find some momentum below that. But for the future, I use a misty rose background. Bearish directional bias. Does it make the list? Absolutely. Euro loonie makes the list. Euro pound. It might have if we were looking about a week or two ago, right? But now, and you can see back then when I was looking at it, it was in a downtrend, hence it was red. But now I need to change that, don't I? Alice Blue. Non-trending, does not make the list. Euro yen, we already took a look at that. Does not make the list. Non-trending. Euro kiwi, this is a position that I've had for some time. I got in aggressively, so I've been sitting in it for some time. But even though I've been taking some heat on this position, I'm working with the dominant trend. Okay? So yes, Misty Rose, it does, in fact, make our list. Bearish directional bias. Euro US, we took a look. Non-trending. It was once upon a time, but is no longer. Alice Blue background. Does not make our list. Pound Aussie. And again, what we're doing is we're making a list of pairs for consideration where we do have a trend. And therefore we have an edge in the market by there being a dominant psychology. Okay? So when I get to the Pound Aussie, again, absolutely. Do I have a trend here? Yes. Misty Rose background? Absolutely. Does our Pound Aussie make the list? It sure does. Pound Yen. I haven't traded this pair in a very long time, but when I look at the daily, non-trending, that's pretty ugly. Don't want anything to do with it. Does not make the list. Pound Kiwi. We have red grab candles. We do have a nice 4 to 6. Now here is where I want to make a note to myself, because this is a red background chart for sure. I want to make a note to myself. Lack of respect. So we have a downtrend, but it does seem to have the capacity for a lot of volatility. I make a note to myself that if I do wander into this Pound Kiwi in the not too distant past, we had a pretty decent burst of volatility that might have been, I don't know what economic report that was. I can look back on a calendar and determine what it was, but the wave could not keep this market in check. If I do put it on the list, I'm going to put an asterisk next to it, just to let myself know there's something there that doesn't quite sit well with me. So it might be on the back burner compared to some of the cleaner trends, up or down. Pound US, one of the flattest, choppiest markets, definitely doesn't make the list. New Zealand dollar, US dollar. Again, we're trying to find an actionable list of pairs to consider. It's a fairly fresh uptrend. Okay, so I'll go ahead and honeydew this. Slight green background. But again, I want to go ahead and make a note to myself. And if I do put the Kiwi on the list, which I'll go ahead and do right now, I'm going to put another asterisk next to it. So this is the New Zealand dollar, US dollar. Put a little asterisk next to it. Getting down towards the end of our list, a number of US dollar based pairs. The dollar Canada. I like this pair. Fairly fresh downtrend. I like the fact that it's below parity. I will short it on a bounce. It is, below the 200 period simple, below parity. Red background, I will absolutely look for opportunities to short this market, but just beware on that dollar. And when you write that dollar Canada down, put an asterisk next to it. The reason for the asterisk on the dollar Canada, by the way, just so you know, is there are always psychological levels we're dealing with, but none is more psychologically relevant than parity. Just somehow make a visual note to yourself that if we get above parity, we'll still be below the wave and we'll still be below the 200 period simple, but we could rally very quickly on momentum north of that 1 quadruple zero level. Okay? But 71 pips, the 200 period simple, yeah. Okay? The 200 period simple sitting at 1.0073. All right, making our way down the pairs here. Dollar Swissy. It was in an uptrend, transitioned, no longer. Blue background, doesn't make the list. Dollar yen. There is some argument that the dollar yen is in a downtrend, but the dollar, and it's a shallow downtrend, isn't it? And we can see all this congestion here and the fact that this market absolutely, positively does not want to jump in the pool. The pool being below 78. It's sticking its toe in the water, wants nothing to do with being below 78. That is where the BOJ could start getting an itchy sell yen finger, a little trigger finger there, right? So I can go ahead and put 78, remind myself. Yes, I guess there's an argument that this is a somewhat bearish directional bias, but even without the issue of the BOJ, and even without the issue of 78, this isn't a great downtrend, is it? Just on our clarity criteria. Is it smooth? Sure. Is it established? Not really. Is it respected? It is for now, but I'm basically looking at an upside of shorting at 78.50, 78.60 and writing it down to say 78.10, 78.05. Okay? Not necessarily something that is a bad idea, but you are talking about a pair that the closer it gets to 78, the more fearful people get. Okay? The more fearful people get. So ultimately, I will not put it on my list. So what we have done here, okay, as we wrap up our talk, is I'm focusing on the daily, not necessarily from a trading standpoint, but I'm focusing on it to put together a list of pairs where I have a trend, and that trend offers me some clarity into the psychology that is ruling the market. That directional bias, which is always done using the daily time frame, allows me then to choose and understand counter trend versus trend following trades and make better decisions about which intraday time frames I will be willing to trade. So if I go back to one of my trading time frames, like the dollar loonie, okay, the directional bias is down, which tells me that if I'm going to short, I can short really any of the time frames. I can look for shorts on the 240, I can look for shorts on the 1 hour, I can look for shorts on the 30, the 50, and the 5, all of them, because it's trend following. And I don't mind committing to even longer term time frames because there is a dominant psychology. There's more likely room for follow through. Okay, so I don't mind committing to even a longer term time frame. If I want to buy, if I want to go counter trend, and I can identify what is trend following and counter trend by the daily time frame, so I'm going to fight the dominant psychology, go counter trend, and limit that to the 5, 15, 30. So this daily directional bias process is quick. I think it's fairly easy, and it helps us understand what is trend following, what is counter trend, and then it helps us determine which time frames we'll consider for long and short positions. Okay? So that's where I talk about it being a filter. So directional bias is not an entry strategy. It's about your pinpointing the psychology and how to filter different time frames for different types of positions, long or short. Okay? Because I scan across multiple time frames, having the directional bias makes the process of picking a time frame to focus on that much easier. Okay? So this is why it is the first step in my trading, why it's such an important step in my setups, and why I color code my daily time frames according to the bias because it reminds me, visually reminds me what the psychology is. And therefore, I have a much simpler time choosing time frames that I want to set up. And if I do want to get long, this bearish directional bias tells me, hey, you're limited to the 5, 15, 30. If I want to get short, I can do it across any time frame. And I can even commit to longer term intraday time frames like the 240 or the 1 hour. Okay? And that is directional bias. I hope you've enjoyed that.